If you had 60k to invest in either Apple or Google, which would you choose? As the title states, I have 60k. I'd like to invest in a strong tech company as part of my retirement portfolio. Both companies are very attractive. Obviously Apple pays a dividend so I could drip over the next 19 years. But Google has their hands in so many potential markets: AI, autonomous vehicles, medical, that the potential for growth is very attractive. I'm 46 and plan to retire at 65 to gain full pension and medical. I'm not a savvy investor and want to do the right thing to provide added security for me and my wife. Are there better options that I should consider? We have a Vanguard Roth, 401k, that we only established a few years ago. We max out our investment every year. Thanks for the advice and please let me know if I'm looking at this completely wrong. Again, I am not a savvy investor. Look at the top 10 companies by market cap each year in the 1990s and early 200s, then compare it to the top 10 today. Notice how most of the companies in the top 10 back then aren't in the top 10 today? You'd be better off buying a low-cost index fund that tracks the SP 500. Apple and Google make up a large portion of that index, so you get to feel good about it. But you substantially lower your risk by doing this instead of buying a single stock. With that much money to invest, if I was certain I wanted a tech focus, I would choose QQQ over any individual stock. $VOO. I wouldn't put all my eggs in one basket. If you don't already invest in a total market index fund or Nasdaq index fund, I would do that instead. Apple and Google already make up a good share of a Nasdaq index fund, so you'll be covered on that front. Google. But these kinds of questions are an example of why people shouldn't pick individual equities. I would split it across my ETF portfolio. 50-50. EMOP, you want to invest in high-growth tech companies. However, this may be a lot of concentration risk. I'd suggest something like VTech, VUG, or something in that vein. Might have a smaller return, but you're more likely to have a positive outcome in the end, I think. Amiga 0.24 dividend isn't a game changer for me, but I consider both stocks overvalued. They are considered growth stocks, but their performance disagrees. All in Rocket Lab YOLO. Google. Not even close. If you're contemplating between two good ones, why not just buy both? Red Apple. I would never put 60k into one company like that, unless I was already someone like Warren Buffett, in which case I would quit altogether or just park my money in ETFs bonds until retirement age. Google is like the backbone of the whole internet, and Apple is one of the few companies that's worth over $1 trillion, so it's really hard to say which one would lead to more future wealth for you. I would personally split it between the two if you feel strongly about both, but I like the idea of wasting that money on something fun just as much as I like investing it. Google. Still undervalued. Apple, but the real answer is VTI. 25 Apple, 25 Google, 25 VTI, 25 XS. I'd invest in VGT or QQQQQM for lower expense ratio. Why is both not an option? Why are only those two options? Why are you insisting on putting all your eggs in one basket? Split. 100 shares each: Apple, Google, AMZN and the rest into an ETF. Go on YouTube and watch Ben Felix's video on large cap growth stocks. Google. But I am assuming that you have at least 600k in other stocks if you want to put 60k into one. 80 Index QQQSP, 20 Microsoft, Mastercard, Apple, Google. I would split it between Apple, MSFT, AMZN, Google, and maybe a little TSLA next time it goes under $200. I'm hoping it will drop to $160 or $180, or some chip stocks if they dip. You don't have to put it all in one stock, and diversification is your friend. I'd sell cash secured puts 45 to rolling at 21 days on Apple, equivalent to however many shares you would be buying. Not something a totally new person knows about, but it's definitely less risky. If you truly have conviction of holding. Don't ask people. You will get steered in directions that don't make sense for you and will make mistakes but have no idea why you messed up because you listened to some random guy. Do your own research. Figure out your mind. Figure out how you react to losing, winning, and understand how your brain works when money is involved. Then figure out your risk appetite. Then try different strategies and find the one that matches your brain. It took me about 5 years to really understand my emotions, but you're much older, so hopefully you already know yourself. I made good returns with earlier Apple shares and still own a decent amount. Though, I personally wouldn't invest more now. They're not innovative nor in mass demand as they used to be. I'd look into diversifying into smaller tech companies. More risk, but there's tons with potential. Time machine. I would choose Google, but for investment purposes, I would choose Vanguard ETF VUG, which has among its top holdings AMZN, Goog, Apple, MSFT, Nvidia, Meta, TSLA. Gold. Google. No one wants to answer your question because you should invest in an index fund. But your question asked to choose either Apple or Google. For an answer, I think my choice would be Google, noting the question also doesn't give the option for both. I would go 50-50 on Google and Microsoft. I'm just not a fan of Apple, but they know how to run a company so far. Nowadays you can just invest in a large cap index fund and have plenty of exposure in these two companies. The S&P 500 index has 11.3% of its holdings in these two companies. If one of these companies goes to the moon, you will benefit. Keep in mind that trees don't grow to the sky. I definitely would diversify instead of dumping all of it into one company. I'll let you read the other 100 comments that explain it better. Both. Are these your only two options? What about an S&P 500 index like VU? Neither. I would invest in a broad-based index fund like VTI. Picking individual stocks is risky as companies can fail. Buying a basket of all stocks is significantly less risky. Look up Biglehead for very simple investing rules of thumb. Investing can be really easy if you do it right. Both overpriced, but if I had to choose Apple, since at least they pay a dividend. Due to the crazy fans. However, it isn't a good idea to put that much money all into one individual stock. Maybe 10 max of your portfolio into an individual stock. If you were a millionaire, then $60,000 is a small fraction. If you are still eligible for a Roth IRA, then it is a better idea to diversify. Other options for the 90 left over $54,000 in a Vanguard taxable account. VTI. SCHD. Neither. 58k in VTI, 2k in place. That once go 90 will make you glad you have 58k in VT. Apple is the better run business. Why not just 30k into both? If you like both companies, it's never bad to diversify. To answer your question, I think Apple is the slightly riskier bet, but it's the slightly larger company by market cap. I'd go Google personally, but if I was a betting man, I wouldn't bet against Apple to outperform. I just think they also have slightly more risk. A month ago I was helping a friend invest her savings and I bought Google as her largest investment. Apple is currently my largest investment and I have no Google at all. Apple is more attractive after the recent drop, but honestly it feels more like a 50-50 guess right now which one would do the best. I would put 30k in each stock, to be honest. No need to risk it all in one.